So 3 months ago, a monk walked into a bank with a terrible credit score, and they were like, yeah, we'll give you a loan, just at a price that quietly ruins your future. Woo! And that's where it gets worse, because the same house suddenly comes with years of extra payments. Like you agreed to something small, but it quietly keeps taking money forever. Which means the same house ends up costing way more over time. Like you didn't buy a home, you signed up for a lifetime of extra payments that just keep quietly stacking up.
So he just pauses and goes, give me 90 days. And the banker kind of smiles like, yeah, sure, go try whatever you think is going to magically fix this.
And then 93 days later, he walks back in, same person, same life, but now suddenly everything looks different, and even the banker's not quite sure what just happened. Which is where the banker looks at the file and then back at him like this doesn't make sense, because somehow the same person now suddenly looks completely different on paper. And that's the weird part, because nothing actually changed. Same person, same income, same habits. Just suddenly the system now treats him like he's completely different, because the only thing that changed was he understood how the system actually works. And once that clicks, suddenly everything starts shifting without him doing anything dramatic. And that's how he avoided paying a massive amount over time. Not by earning more or doing something extreme, just by not letting the system quietly take extra from him. So now let's walk through exactly what he did, because most of what people follow about credit scores sounds right, but it quietly keeps them stuck paying more than they should. You've probably heard the usual advice about paying on time and keeping things low, which sounds responsible, but it doesn't actually help you escape the system any faster. And while you're patiently following all that, you're still paying more on everything, loans, cards, even basic stuff, just because the system still sees you as slightly risky. So you're basically stuck in this middle zone where nothing looks broken, but you're not getting the best terms either, which is exactly where banks quietly make the most money. And that's exactly why they're not in a hurry to help you improve faster, because the longer you stay here, the more quietly profitable you become for them over time. Which is where things get interesting, because there's a completely legal way to shift how the system sees you, and almost nobody talks about it in a way that actually makes sense. And it's called being added to someone else's account. And what that really does is quietly attach their entire history to you, like you suddenly inherit years of good behavior overnight. Which sounds slightly illegal when you first hear it, but it's completely allowed. It just feels wrong, because it's way easier than the slow method everyone keeps repeating that. Which means their long history now shows up as yours, their perfect behavior becomes your record, and suddenly you look like someone who's been doing this right for years. And within just a couple of cycles, everything shifts fast. Like the system suddenly upgrades how it sees you, even though nothing about your actual life really changed. And there's no hack here, no trick, no shady move. It's just understanding how the system actually works instead of blindly doing what everyone else keeps repeating. Which kind of makes you wonder why nobody tells you this up front, because if it's this simple, there has to be a reason it's not the first thing you hear. Because if everyone suddenly improved, the system would stop making as much from people sitting in that middle zone, and that's not exactly something they're eager to fix quickly. And this is where timing starts to matter more than most people realize, because the system doesn't really care when you pay, it cares when it chooses to look. So even if you pay everything on time, if it's after the system already looked, it still thinks you're using more than you should, which quietly pulls your score down. Which sounds stupid when you hear it out loud, but it's completely real, and most people keep losing points here without even realizing what's actually happening. So instead of paying after everything's already reported, you move it earlier, before the system checks, and suddenly the same behavior starts working in your favor instead of against you. And the weird part is you didn't add more money or change your spending, you just changed when you did it, and that alone starts improving how the system reads you out. And then there's the part where your limits change, because the system doesn't just look at what you use, it compares it to how much you're allowed to use. So even if your usage stays exactly the same, it suddenly looks smaller compared to what you're allowed. And that alone makes you appear much more controlled to the system. And again, this isn't something they push very hard, because the more optimized you become, the less you end up costing yourself over time. which quietly reduces how much they make. But this is also where people mess it up, because one wrong move here can undo everything, and most of the damage usually comes from things that seem harmless at first. It's like attaching yourself to an account that already has problems, because instead of helping, you just imported someone else's bad history, and now it's quietly affecting you too. Or applying for new accounts right in the middle of fixing things, which just resets part of the progress and makes the system question you again for no good reason. Or just being inconsistent with timing, because one careless cycle where you miss that window can quietly undo progress and push you slightly back again without you noticing. And expecting this to work instantly is another mistake, because the system updates in cycles, so even if you do everything right, it still takes a little time to reflect. So instead of guessing, you follow a simple structure based on where you are right now, because the way you fix this depends on how the system currently sees you. So if you're starting from the lower side, the focus is fixing how the system sees your history first, not trying to do everything at once and overwhelm yourself. And if you're somewhere in the middle, this is where everything starts combining, because timing, limits, and history all work together, and small adjustments here can suddenly create much bigger shifts. And if you're already in a good position, it's less about fixing and more about optimizing, because even small improvements here can quietly reduce how much you end up paying over time. Nice. Which is where you realize this was never about being financially perfect. It's just about understanding the rules of a system that was never really explained properly. And once you see that clearly, you stop moving slowly through it, because now you're not guessing anymore. You're just making decisions based on how the system actually works. And the part most people miss is nothing about his income changed, nothing about his lifestyle changed. The only thing that shifted was how the system interpreted everything. And that's the part that actually costs people the most. Not being broke, just being unaware. So if this clicked even a little, you already know what to do next. Click. Wait, don't. So if you're still doing everything the usual way and wondering why your score isn't moving much, it's probably because you're playing the game correctly, just not strategically. Simply because the system isn't rewarding effort, it's reacting to specific signals. And if those signals aren't optimized, you can keep doing the right things and still not see results today. And once you start fixing those signals instead of just repeating habits, the system updates much faster, which is why some people jump scores quickly while others stay stuck for years. And so the difference isn't discipline, it's awareness of how the system calculates things, because once you see that, you stop guessing and start making moves that actually change outcomes. So when your usage shows high at the wrong time, lenders price you higher, which means the same loan costs more every month, even though your income and spending didn't actually change. And when your limits are higher against the same spend, your utilization drops, which signals lower risk, and lenders respond by offering better terms on the exact same profile. And when that happens across cards and loans together, the combined effect compounds, so small improvements in multiple places stack into a noticeably lower total outflow every single month. And that's why two people with the same income and same spending can end up paying very different amounts every month, just based on how their profiles are structured. And lenders don't guess this. They read it directly from your profile, which is why small changes in how data shows up can immediately change the offers you get. So the real goal isn't just increasing the score, it's improving how your profile looks at the moment it's evaluated, because that's what directly affects pricing decisions. Which is why doing the same actions at the wrong time or with the wrong structure keeps you paying more, even though on paper it looks like you're doing everything right. But when the same actions are structured correctly, the exact same profile starts getting priced better, which directly reduces how much you pay every month without increasing income better. And that difference shows up directly in your EMI, where even a small change in how you're priced can reduce the monthly payment and total outflow over the full term. And over the full loan term, that gap keeps repeating every month, which turns a small pricing difference into a very large total cost difference by the time everything is paid. And none of that required earning more or cutting expenses. It was just changing how the same data shows up when lenders evaluate your profile for pricing state. And so the takeaway is simple. Control when your usage is reported, keep limits high relative to spend, and make sure the history you're attached to actually strengthens your profile. But when And if you apply these properly, your profile starts getting priced better almost immediately. So if you want more breakdowns like this, you already know what to do. Because at the end of the day, lenders are just pricing risk based on what your profile shows at that moment. And small changes there directly decide how much you pay. So before taking any loan or increasing usage, make sure your profile is optimized first, because once it's evaluated, the pricing is already locked for that cycle. And if you repeat this process before each major application, you keep getting priced based on a clean profile, instead of paying more just because of how your data showed up that day. And if you skip that step even once, that one application gets priced worse, which means you're now locked into higher payments on that loan, even if everything improves later. So the move is simple. Fix your utilization timing, increase limits where possible, and attach to clean history before applying. So every approval comes with better pricing built in. And once that's in place, the same lenders start offering better rates automatically. So you're not negotiating harder, you're just getting priced better from the start. Which is why before any big loan decision, the smartest move is to optimize your profile first, because that one step directly decides how expensive that loan becomes. Yes, so if you're about to take a loan or already paying one, this is where you can actually reduce your cost without changing income, just by fixing how your profile is structured. And once you understand this, every future application becomes cheaper by default, because you're controlling the inputs lenders use instead of reacting after pricing is already set. Yeah, so if you want more breakdowns like this that actually show how money systems work in real terms, hit like, subscribe, and I'll keep breaking these down step by step. Do that.